Good day, Industrial Advisor listeners, and thank you for tuning in. If you have not subscribed, please do so by clicking subscribe wherever you podcast. Click the like button and hit the bell if you want notifications of when we put up new content. Leave us a comment about anything we discuss here today or general comments about the show. Now, let's get into it.
Welcome to our Industrial Advisors podcast with Bill Condon and Matt McGregor. Today we're talking about Puget Sound industrial trends. We're almost halfway through the year,
Yes,
2023, which is crazy. And it's been a very interesting first half.
For
I think
sure.
we want to start talking about some of the leasing trends that we're seeing. One of the things that's noticeable right now is between 100 to 200,000 square feet, the market seems to be relatively slower than it has in the past. Now, we've had a lot of velocity in the past in that size range. It's been the bread and butter size of the market, but there are noticeably more vacancies between 100 and 200,000 square feet, and we're starting to see landlords get more aggressive in that size range.
For sure. Mostly in Class B stuff, right? That's sitting a while. It's been a little bit of flight to quality. Unfortunately, to your point, that's what people have built into because that has been the velocity in our market, 1 to 200,000 feet. Sumner, 150 to 175 was, the normal deal, right? And now everybody built to it. And then at the same time, the requirements got a lot bigger through COVID. And so there's building up, inventory on that for sure. And so with that, I think landlords have to be a little more aggressive, and some of them we're seeing now taking some less credit.
Yeah, there's more risk on credit, more concessions, more free rent, and we're starting to see rates maybe even come down a little bit in that size range, which we have not seen rates come down in any segment of the market for some time now.
Yeah, it's strange to say that when the vacancy is only 3.7%.
That's right.
But it's not 3.7. 1 to 200,000 feet.
That's right. That's right. It's funny because, we were talking the other day, there's been more open houses in the last, call it 3 to 4 weeks in our market than there's probably been in the last 5 years combined. Yeah.
Yeah. I mean, you didn't have to do open houses in the last 5 years. Everything was leasing, quickly, mostly new product. And yeah, to your point, it was amazing when I think you brought it to my attention a few weeks ago, and it is insane how many open houses there are and what people are doing to get people out there. One of them was $200 to show up, right?
Yeah. That's
plus the grind.
Market that's a ways away.
Sure.
But
that's the first of that kind, right?
Yeah. And to our point on the 100 to 200, a lot of those open houses are in that size range.
Right.
Yeah.
That's right.
So there's that segment, but then you look at, the 500 plus, and there's actually okay activity in that size range.
Well, I would say there's very good activity.
That's right.
I mean, there's no performas that are bleeding, right? There's not 500,000 footers sitting vacant that are completed, right? You've got, I think we both know Bridge Milton, not completed yet. Looks like they have a lease on the entire just under 1.1 million feet.
Yep. They have great activity on it anyway. And
looks like it's going to lease, right? The other one obviously is LPC Frederickson. We've got some activity on that.
Great buildings.
Oh, well, maybe the best building ever built.
Yeah.
Might be our listing.
Phenomenal buildings, yeah.
But I would say decent activity, not COVID activity. That would have pre-leased, right?
Yep.
Amazon or somebody would have grabbed it. But certainly, I'd say much better activity than we're seeing on the 1 to 200. But to my point, there's no 500 plus standing vacant with an aggressive landlord saying, I better get this leased up, right?
Yeah, that's right. And, you mentioned the pre-leasing. We've never really been a market that's been a pre-leasing market, right? Typically, and now during COVID, that changed a little bit when everyone was just grabbing space.
That's right.
In the past, we've been a market that you build it, tenant's going to show up within the next 6 months if it's a good quality building.
That's right.
It's not surprising that some of these buildings that are great and really well positioned in the market have not pre-leased. I think we're going to see some good activity in the next, 6 to 9 months on some of those new builds.
That's right. But to your point, based on the available buildings, say greater than 400,000 feet, and the tenant velocity, that's not, you're not nervous if you've got those listings. 1 to 200,000 feet, we're getting creative, we're being aggressive, we're calling, you're cold calling, you're calling brokers, you're having open houses, you're thinking of innovative ways to lease up. You're facing a challenge.
Yeah, and then we've talked that 1 to 2 market, we've talked the big box market, which is good. The 25 to 50,000 square foot market is actually doing pretty well, right now as well. Whether it's renewals or new deals, there seems to be good activity in that size range, which I think is a good telling sign for the market as well.
Yeah, and I think there's always been good activity in good 25,000 footers. The interesting thing is there's not a lot of 50s, right?
Mm-hmm.
And in the last, not to say we're in a full-on downturn right now, but the last downturn, remember that 50,000 segment was brutal.
Yeah, 50 to 75 in that last, however many years ago that was the market that really got hit hard. But that makes sense. If you fast forward to where we are today, our market's grown since that time.
The sizes,
so that
yes.
50 to 70s then are now the 100 to 200s
yes.
today.
Yes. And I remember I remember doing the calculations, I geek out on statistics.
Yeah, I do know.
I remember doing a study for one of our landlords because there were so many. And then we divided it by, the average absorption of those and tenants in the market. And we calculated that there was like 4.4 years of supply of 50 to 75 in the North Valley.
Yeah.
Right?
Yeah.
And it probably took that long for that to absorb.
Yeah. I mean, there was a lot of vacancy. I remember that time. But
that was painful.
But then it rebounded. And but yeah, that was the market then. And so I think it's good news that 25 to 50 still pretty strong.
Agreed.
Kind of shifting to the investment activity. It's been almost historically kind of slow first 5 months of 2023. Yes, of course. Obviously, the capital markets world has changed with where debt's at and everything else that's going on right now. So it's not shocking that, given what an institutional type market we are, and we don't have a ton of sellers, it's just there just hasn't been a lot of product that's hit the market. That combined with the fact that there's less buyers out there, for product right now.
Yeah, you take the Link and Clarion sales out, and it was really quiet in the last year.
Yeah.
Right?
Yeah,
Those were big transactions.
Those saved last year's numbers at the end. For
sure.
Yeah. Yeah.
Yeah. But to your point, but slow activity, but I will say it has been crazy with the amount of investors that are showing back up. Not aggressive saying we have to place money, but when you go 5 straight quarters with not putting allocations out, you've got some pent up demand on the acquisition side. And at the same time, I think sellers that, we're selling, hey, we're a 3 cap seller, and all of a sudden you're telling them, no, it's, 4.25 or 4.5. We're not sellers. After a while, they're like, okay, maybe that's not going to return. So I think you're starting to now see some of those guys come to market. And you made the point. I mean, it's crazy amount of calls that we've got from both institutional and private equity on asking us to put together BOVs and Argus runs to possibly sell buildings, like a crazy amount.
Yeah. So to your first point on there being capital, there definitely is capital, and that capital is focused on markets like the Puget Sound, some of the better markets in the country, and Puget Sound is definitely one of those. There is a flight to quality on the investment side too. So there's
and
demand.
And a flight to short-term wall.
Yes. Shorter-term leases are better.
Yep.
Yeah. But the thing on that is your point about the BOVs. We have had more BOV requests in the last couple of weeks than we have in a long time.
Mm-hmm.
So while the first half has been slow on the investment side, I think it is going to pick up pretty significantly in the second half, and there's going to be a lot more opportunities for buyers. Now, whether they'll all trade or not, we'll see, but there's going to be more opportunities in the second half of the year for investors.
Yeah, and we've got some stuff out in the market. We're seeing way more buyers active than we've seen, say, in 5 quarters, but still very careful buyers.
That's right.
They're not over-the-top aggressive and jumping over each other to pay up, right? They're looking for value.
They're looking for value, and it's changing on a weekly basis,
yes.
right? On who's in where and what people are focused on. So it's just, each week seems to be a little bit different right now.
That's right. And we're still seeing product, being introduced, being pulled off the market for not hitting expectations.
That's right.
We've seen a couple of those. One just got pulled again last week. I won't name what it is, but, it got pulled again.
Yeah, second time.
So we're still seeing buyers saying, no, we're not gonna be silly.
That's right. And then land. I mean, land is tough right now with where construction costs are, where debt is. It's hard to make land pencil for developers right now.
Ooh, yeah. Well, it is, and we did a segment on this a few weeks back. But when you first of all, you have to have the right piece of land. You're not going to build into the 1 to 200 probably right now, depending on location, and depending on functionality of the building. Right? If you're going to build a best in class, and you're going to be the right building, then that's okay. But my point is, there are a couple of pieces of land out there that we are seeing very aggressive offers and runs on, some marketed, some not. I think where people are punting is that land again that would develop 1 to 200,000 feet. We saw a lot fall under contract and maybe a 40 to 50% cut in top of the market per square foot prices for that land.
Yeah, land's just tough right now. But there's still buyers out there for good quality land just because there's not a ton of land that's left in the core market.
That's right. Then you got the issue with construction financing on it.
That's right. Yeah. That's a big one.
It jumped from construction financing about 3% to about 9% for that 2-year construction loan.
Yeah.
So that hurts.
That's a bit of a spread there.
That's right.
And so some of the bigger projects we've already touched on. You have the LPC stuff in Frederickson that great buildings that are just getting completed. We touched on the Bridge Milton building that has really good activity. That'll likely go soon. And then Fred 310 seems to be doing really well.
For sure. I mean, they had a wide open canvas with multiple different variations of sizes of buildings. So I think they got a lot of looks because of the variety of types of deals they can do.
Yeah, I mean flexibility, right? And that's a great submarket too. So
For sure.
We think all of those projects are going to do really well and potentially all lease in the second half of this year. The one to keep an eye on, South Seattle is a very different market right now.
Whew.
South Seattle is typically a market that is geared towards 10 to 20,000 square foot tenants. That's the average size tenant there. And as things have continued to push south, deal sizes there have actually gotten smaller. You have a group that's building a 2-story, 700,000 square foot building right in the heart of that market that is expecting to get South Seattle rates that are pretty expensive. It'll be really interesting to see how that goes and how long that takes to get absorbed.
Yeah, I mean, there's other projects there that are struggling. I don't know what it is. Our whole careers, that market's been tight. 1 to 3%. Suddenly it's 6%.
Yep.
And very quiet activity.
Yeah.
It has to bounce back.
Yeah. I mean, it's close in, it's infill. So a big part of that's going to be, will big tenants go pay the freight to be in that South Seattle market? Labor's hard there right now. So it's hard for big distribution centers, big fulfillment centers to go find great labor in that particular market. So we'll just keep an eye on that and see. I mean, it just takes one, and it's a phenomenal location. So we'll see.
Labor's expensive there. Politics can be rough.
Yep.
I think a lot of the cleanup of the homelessness in Seattle has pushed into that industrial district, and I don't think tenants have loved that.
That's right. So very interesting kind of first half of the year. I think the second half, if we're making some predictions right here, and this isn't going out on a limb, but the investment activity will obviously increase given where it was in the first half. There's going to be more product. There's going to be more opportunity for investors. I think it's going to start to stabilize. And right now people are still figuring out where is the market on the investment side. There's going to be enough trades in the second half to where that equilibrium is going to get set.
What do you think that average cap rate is the rest of the year?
Depends on the WALT, but I think we are settling in the Puget Sound region. I'm going to say kind of between, a low 4 cap to a 5 cap market. And it's just in between that range, depends on the WALT, the building, and everything else. So that goes into it.
For sure. Yeah. And let's go back to our January predictions. You said 7 million feet of absorption for 2023. I said 5. You still holding out?
Well, yes, I have to. I'm not going back on it. It hasn't been a great absorption year to date so far. But when we just talked about some of the highlighted deals that are out there, all of a sudden we're quickly to call it 3.5, 4 million feet, and then you got the fourth quarter. So I don't know. I'm staying firm on the 7 million.
Yeah, I do think it'll pass my number. I just think it might be still closer to mine than yours. But I do think it'll pass 5 million feet, which is historically a very good year.
Yeah, I mean, typically we're 4 to 5, whatever it is. So we should hopefully do better than that. So
That's
be an
right.
interesting second half of the year, but first half has been interesting. I think second half velocity across the board is going to be better. There it is, Puget Sound trends and future outlook. Thank you for listening.
Thanks a lot.